Hello. On the screen is Adani Power's Quarter 1 Fiscal Year 2026 Earnings Conference Call. This took place on August 1st this year. In this earnings call were present Mr. S.B. Khalia, who is the Chief Executive Officer of Adani Power Limited, Mr. Dilip Jha, who is the Chief Financial Officer, and Mr. Nishit Dev, he is the Head of Investor Relations. To give quick idea of what a earnings conference call is, this is basically a meeting where the management shows to the shareholders. This is a meeting where these three people have come from management and shareholders are invited to this meeting. It can be offline, online. Management presents the latest financial results and the latest happenings in the company, and the shareholders can ask questions from management. So, a lot of important things were said in this con call. Let's find out. So first, we are come to page 3 of this con call. Page 3, I've already underlined some of the things. Okay, so this was said by Mr. S.B. Khalia, the Chief Executive Officer of the company. We have expanded our capacity further by acquiring Vidarbha Industries Power Limited. So Adani Power latestly acquired Vidarbha Industries Power Limited, which has a 600 megawatt capacity, which has been revived by us. This acquisition will further expand their presence in the state of Maharashtra and provide further opportunities for growth. So 600 megawatt capacity company has been acquired, and the name is Vidarbha Industries Power. Second important thing said. Apart from this, we have also received more than $500 million in payment from Bangladesh Power Development Board towards their outstanding dues in the end of June and in July. The customer has been paying us now regularly. So the previous issues with Bangladesh and Bangladesh not paying the power, paying for the power supplied, Bangladesh Power Development Board has now given more than $500 million in payment, and the customer is now paying us regularly. All right. Moving on, we move to page 4. Page 4, just the next page 4. Very short line said here. During the first quarter of financial year 2026, while the all India demand has shrunk by 1.6% due to early monsoon, Adani Power supplied 1.6% more power with 24.6 billion units as compared to quarter 1 fiscal year 2025. So they supplied 24.6 billion units of power, 1.6% increase compared to 12 months or quarter 1 fiscal 2026, and the all India demand for this quarter decreased. It shrunk by 1.6% year on year due to early monsoon. Because more monsoons, more rain, less sunlight, less heat, so less power requirement basically. It's less warm. It's less warm. So power demand decreased for this quarter. Power demand decreased, which explains Adani Power's latest, what can you say, very bad earnings. Revenue did not increase by much. EBITDA decreased a lot. It can be explained a lot by that the power demand itself decreased. Moving on, we have one more thing on the same page. Now, here he says tariff realization was lower during quarter 1 of fiscal year 2026. Okay, one point tariff realization. The word tariff just means the price at which power is being sold, the price at which electricity is being sold. That's what tariff means. So tariff realization was lower during quarter 1 of fiscal year 2026 due to lower import coal prices in addition to lower short-term tariffs. In the short term, operating expenses were elevated due to recent acquisitions. We are undertaking various initiatives to turn the units around quickly, improve their profitability. So tariff realization, meaning the prices at which electricity in the short term was sold at was lower. The prices were lower because of lower import coal prices. Basically, whatever power Adani Power sells, It has a clause, it has a condition that if the coal prices are like a raw material that Adani Power uses to create power, to create electricity. Coal prices decrease, Adani Power has to lower electricity prices. If coal prices increase, then Adani Power has to do what? They have to increase the prices. They can increase the prices. So lower import coal prices were there. And these lower import coal prices, these conditions for increasing and decreasing electricity prices according to coal prices for the long-term agreements to sell power. So lower import coal prices affected the long-term agreement electricity. But the short term, like you can sell on the day-to-day market. So some amount of electricity Adani Power sells at prices determined by market supply and demand. And these are the short-term tariffs, so short-term times. And there was lower demand this quarter, 1.6% decrease in demand. So the prices, as demand was low, supply was still there, prices were low. So long-term electricity prices were low because of lower coal prices, and short-term was low because demand was low. Then their operating expenses were higher this time because of recent acquisitions, and they're taking initiatives to turn the units around. So they acquired some units and they're trying to turn them around so that they can produce electricity, these newly acquired units. And of course, in order to turn them around, the costs were there. So these led to elevated short-term operating expenses, leading to lower profitability. All right, moving on. We move to page number 8. We are going all the way to 8. Okay, page number 8, we go a bit low. Fine. Now this question, okay, this underlined part, the first underlined part is a question being asked by a shareholder. The question is on the recently acquired Vidarbha asset, the Postal asset, and Lanco asset. So three new assets have been acquired, three new units have been acquired by Adani Power. All these units will produce electricity. How have the operations been? Are you facing any challenges? What is the PLF or the plant load factor? Basically, how much of total power that a unit can produce, how much are you actually producing? And for these three acquired assets, what is the EBITDA we can expect? The question is answered by Mr. S.B. Khalia again, the CEO. With Lanco Amarkantak, the first asset newly acquired, we have very few challenges except a small issue related to ash disposal that we are taking care of. Here he says the Lanco Amarkantak is most probably addressed. So Lanco Amarkantak asset, no issue. The coastal energy plant they recently acquired will get addressed by the end of the month. And there is no challenge as far as Vidarbha is concerned. So all three assets, whatever issues there were, they will probably get addressed very soon. They said Lanco Amarkantak already addressed, coastal energy by the end of this month, August, and no challenge with Vidarbha. So all three new acquired assets will probably bring in revenues pretty soon. Then, further, he says a merchant realization for quarter one, merchant realization prices at which electricity is actually sold was 6.51 rupees per kilowatt hour, as against last year's same quarter, it was 7.6 rupees. So prices at which electricity was sold declined from 7.6 rupees to 6.51 rupees in 12 months. All right, this is important. Why? The merchant rates during quarter one fiscal year 2026 were obviously much lower than as compared to the same quarter last year due to weather conditions, which we mentioned in our initial remarks. As you are aware, sorry, as you're aware, this year's monsoon has come in the month of May itself, and there were weather disturbances in the month of April also. So, April, May, June, entire quarter, from the point of view of power, was very sluggish. point of view of power demand was very sluggish. And since this is like a future outlook, and since the monsoon has come early, we're of the view that the monsoon will be over early as well. And therefore, we think that the outlook of even the second quarter will be better than last year's because of this reason. So we think that outlook of this second quarter will be better than last year's. And that is last year the monsoon was delayed and the impact of monsoon was in the second quarter. While this year the impact of monsoon is more in the first quarter. So second quarter onwards, the demand should pick up and we feel there should be a good demand and consequently merchant rates. So they feel that second quarter onwards, demand should be up, merchant rates should be up, and consequently revenue should be up. Okay. Uh, Moving on, we come directly to the last page. No, actually, page 10. We come to page 10. Okay. So a question is being asked to management. Good evening, management. Thank you for the opportunity. His question is, what is the revenue and EBITDA guidance for fiscal year 2026? Revenue and EBITDA guidance, what is the target? The management said that they do not have any specific guidance for revenue and EBITDA because, see, one thing is that the revenue is a bit variable because the tariffs, the prices are linked to imported coal prices, and they have also for the EBITDA not given any guidance. But important, what we have said is that our current business model and type structure actually gives us very stable revenues and margin. So till the time our expansion takes place, you can expect similar EBITDA margins that we have recorded in the last year. So management basically says the business model allows them to have very predictable revenue and profits. Why? Because basically Adani Power sells most of its electricity under long-term agreements. So the prices and all are already mentioned in the agreements. And he says that till the time the capacity expansion takes place, you can expect similar EBITDA margins. Similar EBITDA margins. So whatever EBITDA margins were last year, like 36 to 38%, you can expect similar this year. No guidance on revenue or EBITDA, but similar EBITDA margins. Fine. And lastly, we have the last question. Okay. Now the analyst asked that the consolidated debt, the total debt in the PPT, which is the presentation, the managers had a presentation, was about 6,000 to 7,000 rupees crores has increased this quarter. So compared to 12 months back, debt has increased by 6 to 7,000 crore rupees. So debt has increased this quarter for existing entities, while it has remained the same for the under construction projects. So he just wants to know that the extra debt they have taken for this quarter, what is the purpose of this debt? So Mr. Who's this? Dilip Jha, the Chief Financial Officer, the CFO of Adani Power, answers. Thank you for the question. Now, on average, on an annual basis, our FFO is basically funds from operations, the real cash they're making from operations. That's it. The FFO is more than 21,000 crores on an annual basis, and in the next 5 years, it will be more than 1 lakh crores. Now, so the total funds, total money they are going to be making from their operations for the next 5 years in total will be 1 lakh crores, more than 1 lakh crores. Their capex for the capital expenditure program is also of that amount in aggregate. So they will generate sufficient cash flow which will meet the requirements of their capex plan. Over and above this, we will also generate additional cash flows from the plants that are presently under construction. He's saying all of the capex they're going to have in the next few years, their internal cash flows will fund this. Basically, they don't need to take any more debt. any substantial debt to fund their capital expenditures, expansion in their asset base. But recently, answering the debt question, they took some interim bridge funding from banks, and that is only to meet the interim requirement capital expenditures. Interim requirement capital expenditures. So, in the interim time, in the short term, to meet certain capital expenditures, they have taken some debt. Maybe cash flows were not coming in right now, as they had more expenses this quarter, whatever. In the long term, whatever funding they need for capex, it will just come from their own cash flows. So do not expect a massive increase in debt, basically. And they're anticipating that their internal accruals will be able to meet their capex requirement for the year. That was it. The increase in debt was because of some interim bridge funding from some banks. That is only to meet the requirement for some interim requirement capital expenditures. So capital expenditures interim between the year. That's it. That was all said in the con call. That was some of the highlights. Overall, as a summary, power demand was weaker due to monsoons. So power demand was weaker, leading to lower revenue, all because of some external factors not under Adani Power's control. Next, they expect similar EBITDA margins as compared to last year. They expect second quarter and onwards, demand should improve and revenue should improve. They were less profitable as EBITDA and profit after tax fell for this quarter because of higher expenses because they acquired some recent assets, recent acquisitions, and they're trying to turn them around. So that's it. And of course, increase in debt was to fund some interim requirement capital expenditures. Oh, and in the long term, at least for this year, they're going to meet their capex requirements from their own cash flows and not debt. That's it. Have a nice day.